365, shake my hand and welcome to another Traders War Room number 87, right? It's been a while since I did, a Forex indices across the board sentiment, type of war room. A reminder, I am a supply and demand trader, smart money concepts, order blocks, order flows, all that good stuff. And in these war rooms, I map out what I think is going to happen in the markets way ahead of time, applying structured supply and demand trading strategy to kind of really see where price is going according to what we believe is bigger banks, institutions, financial flows that actually control the governing trend of the markets. Now, the last time I did one of these with you guys, you'll recall we were still waiting for CPI data, and that's been almost 2 weeks ago, right? I did a crypto war room, so I hope you check that out. I mean, a couple of Bitcoin sell trades, a few trades did trigger off that, so that's going well. But, since we literally looked, talking about looking at the overall market from a bird's eye view, the stock market, recession, inflation, power, all that type of drama, it's been about 2 weeks, right? So the last time I did a war room was war room number 86. And then CPI, I think, dropped the following week, straight after that. And CPI, for those of you guys who remember, was a complete shocker, right? For me, it was a shocker for me. And for a lot of people, it actually pointed out to, inflation trending downwards. And it gave markets a lot of risk appetite. And so those rallies that we saw continued. The rallies were started off by a rumor about, a Fed pivot point in December. Powell shuts it down, increases the interest rate on Wednesday. We do a week. I do war room 86. CPI data comes out, and actually inflation is tracking a whole lot lower. And out of nowhere, my confirmation bias is pretty much suspended, if not useless right now, because markets continuously keep rallying, right? So I haven't been in the Forex markets, for a long time since then. We were completely distracted by FTX saga, the complete collapse of crypto, Blockify, Celsius, Genesis, everything was just melting. So we've been moving, all our funds for corporate clients, for my family, everyone who's really integrated in 365, moving and buying stuff and putting it into cold crypto wallets. Please remember, not your keys, not your crypto. Get yourself a cold wallet and move your assets there. No one can take them away from you. We don't know, how far the contagion will spread. You can see it's still morphing and spreading. We're still waiting for regulators to get involved and all that kind of stuff. So always move your crypto off the exchanges and put into a cold wallet that you can literally live for your children's children's children, if you're that kind of a human being, right? So, today I'm going to look at currencies. I'm going to look at indices. I'm going to look at, a whole lot of things in the market. We're going to talk EURUSD, Pound USD, NZDUSD, and AUDUSD. Remember, these four assets are our risk-sensitive assets. They primarily tell us the state of the world in terms of sentiment, right? So we want to see that. And of course, when you're looking at those assets, you want to be looking at what the DXY is doing, what your dollar index is doing, how strong is the dollar. And the dollar has arrived at a monthly governing demand, right? So it's quite interesting, the timing of all this. Remember, I'm recording this on the 27th of November. So next week, there's going to be NFP, non-farm payroll, which is a very important critical data point for the Fed, because remember, the more negative things become, it signals that the Fed has done a good job, that increasing the interest rate has successfully succeeded in what they wanted. They wanted to slow down the economy, discourage spending, tighten companies' pockets, destroy demand, right? So the stock markets have been falling, housing crisis, etc., etc. All of that to help curtail the inflation problem. And so when we look at our risk-sensitive assets, EURUSD, Pound USD, NZDUSD, AUDUSD, and look at the dollar index, right, we can actually start to see if the economy is now catching up with what the Fed has been doing, right, in terms of those rates. But we can also then, from there, extrapolate, an idea as to whether on the 13th of December, our final interest rate hike meeting for the year, if Powell is going to do a Fed pivot point, so either slow down in terms of increasing rates, pause completely increasing rates, or actually go back to the normal 75 basis point. We really don't know right now, but we do know that, we are fast approaching that time. So there'll be NFP next week, and then CPI and then CPI, yes, and FOMC meeting, right? So there's December, the first 2 weeks of December are going to be extremely volatile, and we really want to map out some very clean supply and demand levels, right? Straight after that, I'm going to look at USDJPY, NASDAQ 100, S&P 500, US 30, J225, the Japanese index, or the Nikkei 225, gold, right? And then finally wrap it up with some oil. Just a quick, as I record again, we are aware that China is going through current protest around, COVID policies. And I saw the indices negatively react to that yesterday, but it wasn't something to kind of like ride home about, right? So if that's enough, I would like us to get started. But before that, I want us to reflect, because War Room 86, which was the war room just before CPI data was released to show that inflation was actually doing well. War Room 86 was one of our, poor performing clusters of signals I've given throughout the whole year in the currency market, right? And we still averaged out profitably by like 100 and something pips. But I just want to quickly do a transparent breakdown, because I found it interesting. I know why those trades didn't work, right? Remember, our sell since January, February, March, April, May, June, July. My confirmation bias has been find a supply, get confirmation of that supply, find confluence with that supply, and sell that thing, right? And for the first time, we had a CPI reading that was now literally saying, look, man, inflation data is really dipping. Right now, I want to do a separate video where I'm going to give you guys my confirmation bias on the markets, right? I don't want what I want to say to be put in this recording right now, because number one, it will influence how you trade, how you view things towards the end of the year. Number two, I want to make sure I'm very clear. So I want to do it separately and not really under pressure. So I'm going to remove myself and my bias today. We just want to look at charts for what they are, all right? But I do think we should all be careful. Sellers like me, the bears, should be careful. Buyers, be careful. Everyone right now should be very careful. All right, but I am not easily convinced. It takes time, for me to really believe that something has completely changed. Powell himself said we need several reports that will confirm that for sure, this inflation demon is now under control. I don't think it is. I feel like I'm like all things in life. There's a retracement. You have good days and bad days. Your trade's going up and then goes down. Your profit and loss account goes up and goes down. In your marriage, you've got good days. Everything in life is like that. Inflation is exactly the same. In fact, in 1930, during the Great Depression, in the dot-com bubble of 2000, the 2008, banking crisis, all those big major crises that I've built my strategy on, all of them indicated a moment in time in history where people thought things were not going to be bad, then they got very bad, and then human beings sought out relief, and then things looked like they were getting better, only to get far much more worse again. And so that's a historic pattern that I don't think is going to skip this time around. And so if you don't understand what I'm saying is be very careful that, slow inflation reading for the last CPI report does not necessarily mean to me at this point in time that inflation is actually going down. In fact, historically speaking, inflation does go down, right, when there's an inflationary crisis, and then strikes back up because of how human beings react. So when inflation starts to go down, what did everyone do in the market? Right? Everyone started buying. But as soon as that CPI data came down, people started buying. But what's the problem with that? Well, the problem with that is you start the problem that the Fed is trying to resolve. The Fed is trying to destroy demand, but because investors, traders, the whole world is running on a risk-on sentiment and buying, that inflation is going to come up at the double, right? And when it comes back up, the Fed will have no choice but to rug pull. I'm not saying that's their decision right now or where they stand. I'm simply saying, following the greats, the people that I really respect, the people that I've always learned from, right? I truly believe that more pain is due to come in the markets, and we shall see. We shall see who's right or wrong. I don't think we have to wait for long. We're looking at a financial quarter, so between, right now, end of November into the end of the first financial quarter of 2023, which means be careful. I'm asking you to be very careful with your P&L, right? So let's quickly look at, I'm going to share my screen right now. Let's look at what happened in War Room 86. This will only take 5 minutes. I've already got my notes down for my broker statement. Right, remember, I'm a supply and demand swing trader, so my areas of values are generally big because I'm lazy and very busy, so I'm not always looking at charts. So I use daily time frames to enter. And so because I'm using a daily zone, right, my area of value is going to be big, and my risk to reward is 1:3, so my take profit is also going to be big, and it just works out that way, right? So that's why my areas of value are big. Remember, to calculate how much you lost, right, you must be very honest with yourself, because if you're not honest with how you're losing or how you're handling funds or your own trading, will suffer, right? There is nothing as transparent than your P&L. Your P&L, your broker statement are the most transparent, honest, reflective things about you. No one knows you well the way your broker statement knows you, right? People might think you're a great trader or a bad trader. You need to confirm that, right? So what you're looking at here are areas of value. This is what I mean by areas of value. This was pound USD stop loss hits. This was probably a sell. About 3 weeks ago when I did this stuff, I wanted to sell, and remember, so I'll be looking at a daily area of value, and my pips are calculating from the point in time where I choose to enter, right? So I want price to enter somewhere there on my daily area, and the distance between my entry point and my stop loss value is pretty much what I'm putting into the market as a risk, right? So that's how many pips I lost. Why am I writing pips? Because this is not a lifestyle channel. It doesn't matter, right? Because you could have lost 0.01 times 144 pips. Do you understand? My lot sizing should not matter to you, right? I'm lot sizing according to my account size, and you need to be lot sizing according to your account size, not according to Leroy's account size, right? So which means no matter what happens under hell, under earth, under heaven, no matter which part of the world you're in, our negative percentage gain is the same. So how much we lost percentage-wise to our accounts are always the same, all right? So a lot of traders forget that and want to focus on big monies when they can't handle small monies, right? So real quick, this is what happened, right? So I lost pound USD, or in terms of loss, my stop loss got hit. I saw the CPI data. I still didn't care. I didn't want to move things around. I actually wanted to see for myself how markets were going to move. I was knee deep in the crypto game with FTX saga, moving stuff. The trading floor has been open for an extra 15 days. We're supposed to close on the 15th. We close tomorrow, the 30th. We've moved all corporate clients Intel, money that's supposed to be looped over to next year into crypto. We put a lot of crypto. Then we moved it to cold wallets, and we got all the contracts signed. It's been perfect execution in 15 days. And shout out to my team. I appreciate all you guys for working overtime as usual, and never complaining. Thank you so much. Right. So that's done. By the way, if you want a crypto wallet, link down below, right? It's literally up to you. You can use any wallet you want. I only use the Ledger for myself, for my clients, etc., etc. It's big, it's reliable, it's easy to use. It connects to over 5,000, tokens. You put NFT, Web3, all your crypto tokens. You can connect to almost about 2,000 different applications, different type of exchanges. It's specific, it's easy to carry, it's easy to secure. I'm a big fan, right? So if you want to order your own cold wallet, the link is down below, right? But it's December, so you make sure you do that as soon as possible. Yeah, but we'll make a plan. We'll deliver it for free to everyone and anyone in Africa. I think that was the agreement with a couple of people I spoke to, right? So this is what happened, right? Pound USD, NZDUSD, AUDUSD, AUDCAD, EUROCAD, all of these were stop loss hits. So in total, after that CPI report dropped and the markets went on a buy frenzy, I lost about 607 pips in the markets. And the things that kept going our way at the time, or the things that I kind of like put a stop loss lock, so either I broke even or locked a little bit of profit, was USDJPY, USDCAD, EURUSD, but very little. USDCAD also 20 pips, 24 pips here. AUD, NZD, very good swing that saved us. AUDJPY, I locked up 178 pips. Gold was going my way even up until yesterday with the sell, but I haven't locked profits. All I've done is just broken even, right? So I didn't even add it there, right? So you can see minus gold in terms of pips gained with 718 pips, but we lost about 607. And so we're overall up by 111 pips. And that's trading. Trading is a game of averages. You average up, your account grows, right? So my account is no smaller, despite, an interesting week 2 weeks ago, you know, so to speak, right? And then we had these 3 trades, Euro AUD, no trade. I didn't put the penny in order, didn't like it. You know, markets missed me here. Pound JPY, pound AUD, I was not triggered, right? So that's really, that's how that war room, we haven't had a lot of war rooms where the clusters look like this. Most of the clusters are 80 to 90% hella accurate, but I found this very, you know, interesting, you know, and I thought, wow, this is actually a reflection of human beings. This is my new thing now. I love saying this stuff. Humans are predictable. What does this mean? Predictability means, well, we now know that every time there is an idea of a Fed pivot point, an idea that the Fed will stop raising rates, an idea that inflation is under control. The predictability of humans is humans will move their money, investors, smart money, right, to move their money in big amounts and start buying back assets because they are looking for relief. This is a stock market that's lost over 20 to 30% of its value, right, in about 10 to 11 months, right? So that makes sense. But because humans are predictable, right, it means we can read the stuff effortlessly in the structure. That means markets become readable, right? Because markets are readable. You know that idea that markets are random. When you look at all the traders, smart money, the algorithm, there are a plethora of different decisions that can happen at the same time, at different times, that can change things anytime. That is the randomness within the markets. But markets, from a higher perspective, a very clean strategy, can become very readable when you understand what the predictable human being is going to do. Smart money. All right. And because of that, I truly believe you can trade to become profitable, right? And you can see even on one of our worst weeks of the year, we're still technically up by 111 pips, and this is excluding gold, right, which is just on break even, because I felt, well, it was too tight. So maybe I've been stopped out on zero. We shall see, right? But this is kind of like just a quick summary so that we start off war room number 87 on a new clean slate. I'm not even sure if I want to give signals that intensely. I really just want to talk to you guys, reconnect with you guys. I saw someone even commented, please, war room. I saw a couple of you guys asked. So yeah, I'm back. And my team would be annoyed if I don't announce this. By the way, I forgot about Black Friday. I was told to make announcements. It skipped my mind. I wasn't even doing recordings last week, right? So Black Friday special started on Black Friday, which was last week. Today is Tuesday, and ends this Sunday, the 4th of December. Everything on the Academy is about 60% off, so you can literally join us for 60% off. It's a once-in-a-lifetime opportunity. That link is somewhere down below, right? But let's get started, ladies and gentlemen. War room number 87. Whew. Finally back. I'm happy to set up a few light pending orders. For war room 87, if it's buy setups that I find in the markets, I'm going to go very low. I'm not going to use my 5% risk allocation. Probably going to risk about 1%, 2%. I'm not, because my mind is not yet wired to be a buyer. And I want to be honest with you, because if you're taking my signals, not that it's financial advice, you need to know my state of mind. I am not yet convinced. It takes forever. I need so many confluences to be convinced. I think a big, great sell-off is still coming. I can't shake that view. I'm going to break it down in a separate, shorter video, right, and explain my thesis behind it. But our job is to always trade what we see, all right? So if everyone is buying right now and the smart money is buying, we need to kind of like, you know, rotate around that kind of stuff. And we shall see if that's the case, right? But just so you know, I'm not going in all out the way I normally would allocate my risks, which is a comfortable 2 to 3 to 4 to 5% of my portfolio. I'm actually going much more softer if we find buys. All right. So don't forget, every day in every way, I am getting better and better as a trader. Whatever it takes, better and better as a trader. Some of you guys will waiting for your colleagues. I don't know, man. I've never seen such in my life. You guys wanted these modules so bad, and then all you have to do is enroll, and maybe people are busy, right? But yeah, well, you know, I've just been recording by myself in the background so that whenever you guys are ready, I will be ready, right? So in every day and every way, I'm getting better and better as a trader, right? So those of you who are going back to the basics to get better, do that. Those of you who are going to join the Black Friday special just to get this clean, structured information to get better as a trader, do that. Do whatever it takes for you to get better as a trader, right? So let's just quickly jump through. And maybe before we start with the charts, you know me, I always want to make sure that there's something new that you learn from these war rooms. I found So I read the Fed FOMC minutes. Normally, the whole year I've done a video around them. After the FOMC, there's always FOMC minutes 4 weeks later. I didn't do one. Like I said, I've been very overwhelmed with moving money carefully, correctly, taxes for the trading floor and into cold wallets and all that kind of stuff. So it's been a weird time for me. But I read FOMC minutes. The only big highlight to bring up in the FOMC minutes that recently dropped, which is, remember, FOMC minutes is if Powell does a press conference today, 3 to 4 weeks from now, after all these other reports drop, they will rewrite some minutes and make adjustments to what Powell said if there's a need. And the only thing that came out there is the Fed actually is very impressed with inflation data a little bit. The Fed actually is now worried that they've maybe, it's like almost like a hint, maybe they've overdone it. In the sense that, well, they're now starting to acknowledge that there's still a possibility, a potential for a recession. Once again, we know that we are in a recession. This is not debatable. We know that the White House under Biden tried to redefine what a recession is, right? But we're not stupid, right? Not everyone is stuck under the matrix. We know, economically speaking, we're definitely in a deep technical recession. We know that there's a serious inflationary problem. But for the Fed to also acknowledge this means, that, it gives the market signals that the Fed might be considering that maybe they've gone too tight. But remember, Powell said this in the last press conference. You guys have to really take that man for what he says, until he lies out in your face. And the Fed lies a lot, but Powell has been quite consistent for the most part with what he says is going to do and doing it. Powell said, and I'll remind you very carefully, I have no problem over tightening. That means increasing rates as frequently and as high as we need to get inflation under control. Because after all, we have the tools, right, to untighten, right? It is basically saying when the time comes in 2023, I can just print money. I can print loads of money and fix the problem. Oh, my mic is shaky, right? So I found that quite interesting. But yeah, so this was more interesting than the usual FOMC minutes. I found this to be more interesting. This is a weaker GDP growth, inflation, uncertainty dims U.S. economic outlook, and it comes straight from the Fed's office. So this is actually one of the Fed policy offices. I don't know if it's here. If it's not here, then I'll probably have to go find it. It's just one of my daily reads, and I pick this stuff up, right? So you see, office at the Federal Reserve Bank of St. Louis, right? Literally from the Bank of St. Louis, and Kevin makes a couple of key points in this article, and it came out last week, and I was excited to read it because again, everything is going to say goes against my confirmation bias, and that's great because I need more ideas that will interact with my bias right now, and see who's right, who's wrong. I need either you convince me to let go of my bias, to jump onto this bias, or you create a weaker argument and I maintain my bias, right? So that's just kind of like how I shape my critical thinking. But I enjoyed Kevin's outlook. I don't agree with him, but Kevin did raise some very important points, and it's coming from the Fed. So you have to take, pay attention. As usual, I won't read the whole article for you. I will highlight few key things, right? So let's quickly do like a quick summary, a summary note of what this article is. This is a very short article. And you can find it anywhere on Google if you just type in, weaker GDP growth, inflation uncertainty dims U.S. economic outlook, right? Came out. Oh, and the other thing was last week was my partner's birthday, right? So it's like, I've been busy, man. I've been busy, right? So look, the key takeaways, right? The outlook of the United States real gross domestic product is dimmed, right, over the past year, in the consensus calling it now to increase about 0.8%. And if you know this GDP stuff, that's still quite low, right? So you're looking at a 2 to 3% moderate growth, right? So 0.8 is not negative, but it's still very low, right? Headline CPI inflation forecast to slow from the projected 7.7% in 2022 to 3.4% in 2023. So he's saying, look, man, a lot of people believe this whole inflation is going to go down and down. The Fed has signaled further interest rate hikes are likely, which is in line with what Powell says, right? I don't care what the markets believe. Powell has said, I'm not stopping until we are sure. And if we are not so sure, we might as well just keep hiking a little bit. Even if we do a pivot point, instead of 75 basis points, we do 50, all right? I'm not stopping raising rates because I can always untighten. We have the tools. He says we have the tools to do this. He said this before. I promise you, he said it in the press conference. Now, the pace of job gains is expected to slow in 2023. This is the NFP. This is why NFP is important. Because if jobs have continued to remain strong, it means the economy hasn't fully felt the impact of the interest rates. And by economy, I'm referring to companies, because when companies start to fire people, then it's like red flags, slow down, because now companies can't even maintain people. So he's saying, look, man, job gains is expected to slow in 2023. That's important. It's going to be very specific. But the strength of the current labor market stands in stark contrast to weakness in other areas. So it's still very strong, but next year it should start to weaken. Right, so now here's some important stuff. So I'm just going to read the highlighted stuff. I promise you it's not a lot. And then we can move on to the general market, right? So some key takeaways, right? So number one, the pace of economic activity has been uneven this year after declining at annual rates of 1.6% and 0.6% in the first quarter and in the second quarter of 2022 respectively. So the GDP was negative and we got a technical recession, right? The US real gross domestic product increased at a stronger than expected 2.6 annual rate in the third quarter. So the first two financial quarters is where we got our recession indicator. But in the third quarter, and I've written there for you guys, July to September, he's saying, well, there was a little bit of strength. Something happened. All right. So what's going on? Now, growth in the third quarter was unusually brisk because of large contribution from net exports, the largest 42 years, in fact, right? So, okay, that makes sense. However, the boost from net exports is likely to reverse over the near term. So it's like negative GDP quarter one, negative quarter two. Quarter three was this weird anomaly. It popped. It went well. But based on economic patterns, it's likely to reverse. That's very important, okay? Likely to reverse over the next term, next financial quarter, because the Federal Reserve's board's real broad dollar index, the DXY, the dollar, a trade-weighted measure of the dollar against the basket of currencies, the DXY, was at a 37-year high. Well, that makes sense. We've been buying dollar bills, until recently when things started to change, right? And there's a lot of stuff behind the dollar core. It's not just low inflation and all that kind of stuff, right? There's a lot of stuff I could talk to you guys about, right? But remember, the dollar is printing its own debt, right? So the dollar, there is no real reason for the United States to ever pay back its debt or its loans to the world. It can just print it. If you borrow, if I owe you money, but I also own the currency of which I owe you money, and I owe you 300 trillion US dollars, I owe it to you, but it's in dollars and I own dollars. It's not like I have to go to work to raise 300 trillion US dollars to pay you the money that I owe you. No, I'll go to my factory. You know, Money High season 1, you get, it was a great show, but you understand the logic behind it. We're not going to go just rob any bank. We're going to get money where the banks get money. We're going to go to the factory and print our own damn money too. Well, if they can do it, why can't we? So if I owe you 200 trillion and it's in my currency, I own the dollar, I can just go print that dollar. But any other country in the world can't do that. Because if you owe America or the IMF, like every freaking African country out there, right? A couple of dollars, you know, Cyril Ramaphosa in South Africa keeps borrowing money to do this and do that and do that, basically corruption stuff. You have the ZAR, you have the rand. You actually first need to buy the dollar to pay me. So you appreciate my currency and you pay me. But the United States is a terrible debtor because they can just print their debt away if they wanted to. And Papa Powell is waiting for that time. All right, so you know, I digress, but this is important. Now, however, the boost from net exports is likely to reverse over the near term because the Federal Reserve Board's real broad dollar index, a trade-weighted measure of the dollar against baskets of currencies, was at a 37-year high. It was up in October, and global economic growth, particularly in Europe and China, was weakening, right? So that's why the dollar took advantage of that stuff. Now, according to these guys, they're generally wrong. Guys, surveys, if you follow ADP, if you follow most of the CPI data, some gurus get stuff wrong all the time. But SPF is basically the survey of professional forecasters, right? Who will give us this forecast, and then we all trade against their forecast without even understanding what the forecasters see. It's like dumb if you think about it. But those of you who trade fundamentals like that, good luck. Right now, so their focus was the real GDP will increase at 1% annual rate now, December, November, September, October, whatever, the last financial quarter of this year. Now, if this growth is realized, real GDP would increase by 0.8% over 4 quarters, ending the fourth quarter of 2022. And like I said at the beginning, that's still very low, right? It's far below last year's 5.7%. So last year, there was 5.7 annualized growth on the GDP. So 0.8 is nothing amazing. It's very low because we have 2 negative financial quarters, because we're on a recession, right? Now, well under the economy's trend of about 2%. You want 2% and above. Cool. Now, indeed, a recession is not out of the question. So remember, this is not Leroy now. This is the Fed. The Fed is slowly starting to admit that, look, man, indeed, the recession is no longer out of question. Powell was like, I don't see recession. He said that so many times this year. In every single live stream I did on the 365 Trading Academy YouTube channel, man was denying recession like there was no tomorrow. The following day, on one of the times there was no recession, was GDP readings. So this is it's unique because in their FOMC meetings and in this article, it's the first time we're actually starting to see a change of tone, a recognition that, recession is possible. Now, you see these little marks that you see on this document? These are negatives. Every time you see a negative, the way I was thinking about it is, this is the number of reasons that are pro the Fed slowing down the interest rate hikes, or pro the Fed stopping. Dear Fed, there is now no need for you to keep increasing the interest rate hikes. Our GDP is very low compared to general. Dear Fed, no need for you to keep raking heights. We are now about to enter your level of recession, whatever that means, right? So every time there's a negative here, it means it's a good enough reason to give Powell and his people the idea that what they are doing has been working, and it now might be time to slow down, to pivot. I did a brilliant summary on Fed pivots. If you know about Fed pivots, because I taught them to in one of these war rooms, you would know that during a Fed pivot, we get a moment of just crazy buying because people are celebrating a Fed pivot. But all Fed pivots end in massive negative gains. That's why my confirmation bias has not changed, okay? There has never been a Fed pivot in the history of the markets where the Fed pivots, the sentiment is risk on, and it continues as risk on. No, that's not how money works. Somebody has to pay for this crazy idea, all right? So just be very mindful of that. Now, let's keep cooking, right? So these are the earlier on negatives, right? Real GDP is going down. You know, the dollar was strong against other weaker currencies. So all these were reasons now for the Powell to believe that, look, maybe what I've done is working. Now, this little thing here then went on to summarize equities, the stock market, S&P 500, US 30, your NASDAQ, all that kind of stuff have fallen by 19% and more. The 30-year conventional mortgage rate has increased by 340 basis points. Very expensive now to get a house. The credit risk spread, a yield between, BIA-rated corporate bonds and 10-year treasury note has increased by 21 basis points, right? So basically, the financial conditions are tightening. And this is what Powell always wanted. I'm here to kill demand. I need to tighten. And I'm putting this out there. This article is making the argument, but by making it plain like this, the point of this article is I'm pretty sure Kevin's mindset is, we might get a Fed pivot point in December. We might get a Fed slowdown, or we might even get a Fed U-turn. I don't think a U-turn is in the horizon right now, right? But the point is the Fed might have to slow down, risk on, buying might continue for now into Christmas, maybe, who knows? But next year, somebody is going to have to pay for all of this, because this is exactly what the Fed wanted to see. Equity prices falling, stock market falling, the demand falling, housing prices falling. The 38, literally, everything that Powell needed is now there in plain sight, right? So it goes on a little bit deeper here to explain housing crisis. We don't really have time for that. And then this is another thing, right? A key labor thing. So NFP people, right? So next year, when I'm getting all my NFP speculations right, like I did this year, it's because I do this type of background homework, right? I look at my structure and I look at this. So listen to what they say. This is actually I found this very important. I don't even know why I didn't highlight the whole thing, but this is absolutely cool. That the labor market, right, has thus far remained in previous to its years below trend, GDP growth. In October, non-farm payrolls rose by 216,000 jobs, and the economy has added a total of 4.1 million jobs year to date. It's been a very good, strong year, right? So this year, 4.1 million jobs, or about 400, if you average it out, right, in October, month number 10 of the year, about 407,000 jobs per month. Although the unemployment rate ticked from 3.5% in September to 3.7%, so unemployment started to go up, which is what we wanted to see, or what we expect to see with Powell increasing the rates, right? It remains historically low. Okay, the key labor market fundamentals such as underlying growth in the labor force and recent trends, blah blah blah. Now listen to this. The labor force participation rate suggests that the pace, this is important now, the pace of job gains will slow down in 2023. So remember we kept saying there's a lag. The economy can't feel what Powell is doing. There's an economic lag, right? So to say we're going to feel that lag next year. Look at this, from an average of 407,000 jobs being added per month, right? We're looking at seeing an average of 36,000 jobs being added per month, right? So unemployment is going to most likely go up and less jobs are going to be added to the economy. That's what he's saying. And for now, though, the job openings have exceeded blah, 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 right? And then it does a little graph. And you can see here, this is literally NFP, right? The projection of the non-farm payroll, right? How it's been, right? Jobs in thousands, right? So this is the speculation in thousands. And below is the years in financial quarters. Why? Why Leroy? Because banks think in 3 months, take profit in a year, in a 10-year span. I teach this stuff all the time. Link down below, 60% off. You have to know the basics first if you're going to ever extrapolate money from the market. You must know this stuff. Now check this out. Check this out. So we are here. 2022 in November is the fourth financial quarter, and this is the forecast for the rest of next year. And you can see in general that he believes there's going to be a continuous decline, right, up until the economy cannot produce any type of jobs, and that will be between a year from now, end of 2023, right? So that's going to be an interesting time. But next year, NFP, we know what we should be looking for, right? Another negative, many consumers have maintained their normal expenditure patterns. Powell is trying to reduce inflation. Inflation is caused by excessive spending. Powell wants to destroy demand so that people can stop spending, so inflation can come down. Now check what they've picked up in the trend. Many consumers have maintained their normal expenditure patterns. People are still buying iPhones, iPads, iDis, iCars, whatever, right? Through increased debt. So now it's moved. Consumers no longer have cash on hand. If you look at my videos 3 or 4 war rooms ago, I show you guys a graph, and I show you that there are very few people in America in general, but in the world, saving money in the bank. Most people are living off credit card, liquidity crisis, 2008. 1930, that's how every single crisis starts. Ray Dalio has a book that's 1,415 pages called The Large Debt Crisis. It is cyclical, it is repetitive, it is a continuous pattern in capitalism. Human beings are bad with their money. They are terrible with their money. But they will not take out my black card. People love credit cards. I don't own a single credit card. Okay, not a single credit card. It's a rule in this house. Yeah, and there are ways to create wealth with credit cards, but let's not get into that right now. Now, many consumers have maintained their normal. So yeah, your normal, your everyday life, your groceries, your food, your rent, normal expenditure through increased debt. And by using savings and that they accumulated during the pandemic. So when Powell was printing a lot of money in 2020, all that extra money, the stimulus checks, right? That's what people are still using, right? Now, when this money runs down, which it will, money doesn't stay forever. there's going to be a problem. Now, unless real wages rise, okay, unless people start paying you to maintain this lifestyle you've created and not live on this lifestyle via credit, right, there is a limit to the amount of debt consumers can absorb, at which point consumption spending will probably decline. So it's like, look, man, this is also a big negative, right? So inflation might actually come down when this happens, but we're going to have to trigger a debt crisis, and that's very dangerous, guys. Right, so yeah, look, man, I think very cool article. Appreciate the man, very succinct. I agree. Everything that he wrote is logical. It makes a lot of sense. Of course, he's right. You need to almost say, look, man, the Fed probably now needs to slow down, and the Fed can slow down. The Fed can give us a pivot point in December. I don't care. I will be back in full force as a bear next year if it allows. But if not, I just need more time maybe to get my mind wrapped around a bear market is over, because I really genuinely do not believe that right now. Right now that that's all done, you know, if you guys, yeah, I'm feeling like we can just kind of like look at a couple of charts. Like I said earlier on, about 13 charts. I'm going to fly through them. Most of these charts are already pre-marked, right? So you know, it won't be me necessarily doing a deep analysis. I apologize. And then, because again, tomorrow I must do a video on crypto, because tomorrow is Crypto Wednesday. So I promise to do like a nice, slow, in-depth reading of the markets this coming weekend. But until then, you know, let's see what we got, right? So this is EURUSD, which is our first chart of the day, right? You can see if you've been risk on and you've been buying, good for you, right? We're finally in an interesting zone. You know, I've been waiting for this. You can draw this zone this big if you want. I'm referring to, you know, the bearish engulfing pattern to the left. The inner zone here is probably some daily area of value that's about to get smoked, right? But overall, if I can remove this inner zone anyways, overall, you can see that we are facilitating a weekly supply, a weekly supply. Now, it would be nice to see how price reacts there. You know, this is fundamentally what we need to kind of like, you know, figure out. On our Kini-Hashi candlesticks, right, you can see that, you know, price might actually need to push on a little bit more. So if I was to do something like this, and this is what we call our complicated 365 pattern. It's a PCP, a specific type of supply. You don't know, hit the link down below. You just need to learn. That's all you need. You need someone to give you a chance to learn, and that's what 365 will do. You need to learn this stuff. Right, so yeah, it's double the trouble, right? You've got 2 weekly supplies, and you know, if you go for the golden rule in the markets, the golden rule is always the highest supply wins. If you look at the governing time frame, if I could just draw area of competition, everything, we've arrived. All right, so governor says, okay, we're ready, right? Then we drop down. Like if I have to do old school, I will not be able to do this for all the charts. So I'm going to delete this out. So everything in the yellow is the governor. The governor is saying somewhere in here is a lot of cells, you know, enjoy the treasury hunt, find it. On the weekly time frame now, we want to draw a confluent zone. We've got a weekly supply somewhere there, which markets have basically just engaged in, with trading that happened yesterday and today, inside the zone here. So that will be supply 1. All right. So if you follow my module 1 and you've been around with me for a long time, if we were to code our zones, we would say, you know, Gov 1, right, and weekly 1. And 1 really here stands for the first supply. The first supply, because there's supply 2, but you can't get to supply 2 until you break supply 1. So it's within the governing demand, it's governing supply, and inside a weekly supply, right? So then that's perfect. That's literally, you know, perfectly sitting somewhere in there. But we know that this is a bigger area, and we know that when we use Kini-Hashi, this matters, this complicated candles where markets were buying just to get a better price before selling, making contact with something that looked like a breakup structure. You can combine a lot of things for confluence. And so you could be tempted, you really could be tempted to also, you know, keep in mind to look at this area here, which makes supply 1 slightly dangerous, because for price to get to that red line and above, right, you need to get stopped out. So something that you need to monitor carefully more on the daily time frame. When we get to the daily time frame, this is what we have, right? So this makes sense on the daily time frame. Excuse me. I won't be able to do this for all the charts, ladies and gentlemen, because I feel like the most important part is what I've just done, reading that article, breaking market sentiment, this stuff we know, but this stuff we'll also do again together this coming Sunday, right? So if you draw this area of value very carefully and you mark out your areas of competition, you can see that today, yesterday, markets have been trying their level best, right? They really want to drop from that level, and that's happening there. You see your counter trend, your complicated 365 candles, well, you know, whatever. And then within the governing supply, which is this big yellow zone, you still have this. This is what we used to refer to back in the day as our true supply. Those of you who are very old school 365, your true supply is your final supply, it's your highest supply. It's actually, generally speaking, also has the characteristics of a peak supply, which is something we teach in our module 2. Leroy, what's module 2? Link in the description, right? Just don't be lazy. Learn. I'm here for you, but you gotta learn. You gotta learn. Some of you guys literally, honestly, you amaze me, and I appreciate our direct link and communication. But some of you guys generally send me charts that you want to trade on a live account right now, and you genuinely think I'm going to respond to you immediately. I'm not a signal service provider, and that means my money doesn't come from people waiting for people to buy signals or join the academy. I'm a trader. I've got a trading floor. I've got a lot of things going on. So you know, I always encourage self-improvement, and I give the tools and the inspiration and the rules, and that's what my course is, right? And then after that, we meet weekly so I can chisel you around, right? Some of you guys really want some noodle fixture, but you're not going to get from me, you know. At least now, floor is closing tomorrow, so I'll have a lot of free time, but it won't be to respond to your trade ideas because you want to buy something right now and to respond right now. I'm very calm though, so you'll never get a rude response from me, but it's just important to know how crazy, you know, that idea might look like I almost like I owe you something. Don't, but I love you. Right, so there we go. There's your true supply up there. I would love to put some money here, right, long term. And this is literally probably waiting to see how the Fed plays a lot of things out. Remember, we still have NFP, you know, then we've got another CPI report. And if that CPI report there goes higher, there will be hell to pay, because Powell's going to be like, well, we're not done. So just watch out for that. And that CPI report will drop, I am pretty sure, before 13th December, which is when Powell comes in. So I'll be looking here. This is a good place for day traders, just that I'm looking at charts right now today. So it's a bit too late for me because I like to day trade the London session, which is about 4 hours in already. So for me, today is like waiting for my kids to come from school and then head back to the office or whatever. You know, it's not going to be a serious trading day, right? But this is interesting. Now, where could price go from here if it was to really drop, right? This will be where all your risk-on guys are waiting. All your risk-on guys are going to be waiting somewhere here in the event the supply holds and is true. Otherwise, they're most likely already putting pressure on price to stay up, right? So this would be marking zones. Number one, marking clean take profit areas, marking your counter objectives, right? Be very, very mindful of this, right? And then if this breaks, then I will probably only get triggered here. It's the best place to wait in the charts. You know, it's the closest supply to the, you're literally breaking a supply, a governing supply when you break this area of value, you know, so it's well worth that. And that would be a clear change of direction, by the way. Right, so Euro USD took a little bit longer. Pound USD, we're going to go a little bit quicker. Right, so you remember I started this video, I told you guys for Pound USD, I lost how many? 144 pips. So this is pretty much that sell that I was looking at here when I got stopped out. You can see markets ever since have been moving up and up without me, and that's fine. Again, now it's just that I never want to clean up my charts until we meet again, because how else would you learn? You know, in this market is full of people who are not transparent. But outside of transparency, you need to see it, right? You need to see it play out so that you actually understand what I'm talking about. So we can quickly clean this up together. Now that we know that this did not work, you know, CPI came out, blah, blah, blah. Markets pushed on, right? Markets are reacting to, so this thing that says close, this was a long sell from a long time ago, right? So we sold this in August all the way down, right? So this is not a new trade that I'm in right now. So we can remove all these things. We've already ate that money, or not ate, but I buy crypto. I've just been dollar cost average, right? So this is what price is reacting to right now, and we can see with that reaction that it's not going to last long. That is to say, price still might decide to move up. Why? Because they've already broken the supply, and when you get to these areas up here, everything becomes more contested, right? You can still get a great pullback into this area, and price might turn down. It's just not in line with the 365 rules, because we've got what we call area glass effect on our areas of value. Leroy, what is glass effect? Link down below with the 60% off Black Friday. Join to learn, because not all supplies and demands are equals. I'm doing a war room, so I can't do a lot of teaching, because a lot of people will just black out, because my students have watched these videos already, right? So glass effect is a very important qualifier to your different types of areas of values, right? So I'm not interested at all here, and we know this is already broken, right? You can see it's broken, price is pushing up. So does this mean that the pound has a long way to go? I don't know. We might not even be able to do all 13 assets, guys, because there's some of these charts really need some type of deep investigation, right? So this is the pound on the governing time frame. Very clean, very consistent, breaking very, very significant demand areas, right? There's the pound there. Bearish engulfing pattern on the pound, right? And then markets just continued to drop. And we see that. Now, if I was to remove all drawings and redraw one zone on this entire chart, it would be this one. Right, then all of a sudden you gain some type of perspective, because you're like, holy cow, all right, maybe we've arrived at a supply. But so what was going on here when people were risk on, right? Was this a retracement? Well, let's find out. We don't have to ask questions and not get answers. We're going to draw a downward bearish engulfing pattern. And then you're like, oh, damn. So this area of value is in between the golden ratio and that 50% very common retail level retracement. Right, so it's very high. The odds are high, let me put it that way, that we are potentially dealing with a retracement zone, right? So price might actually continue to the downside, and price might not. And the next time on the governing time frame where a buy trend can even remotely come to an end is somewhere up here, all right? So either pound has to go up all the way there, all right? It's literally that. It has to go up all the way there, or has to start falling right now, right? Or continue in a lower trajectory, right? So thank you, Fibonacci. Then we leave those levels there. And then we want to go to the weekly time frame now to assess, just like we did on the EURUSD. We can see that we've got our complicated 365 counter trend pattern. I'm going to just reduce this area of value. I have not increased how far up our governing supply is. It ends definitely by that red line. All I've done is I've just narrowed down that area of value. So maybe let me not confuse you. It's fine. This is the governing supply. This is literally the kind of stuff that you need to do slowly on the course, right? Not in these videos, right? So this is the governing supply. And then I was saying somewhere in here, we've also got a weekly supply. All right, not the best imbalance. And then we had this inside this area. We can see the governing supply had a mandate to maintain sell pressure, right? So they created a nice weekly supply, which did very good, dropped price. That created another weekly supply that's currently playing with price right now, right? So you as a buyer, you really have a lot of work to do on the pound, right? And as a seller, I understand our hesitancy, but damn, as a buyer, there is a lot going on here, because markets have not yet really broken a true high value supply, and high value supply is the one in the confluence zone of governor weekly daily, right? Governor and weekly, right? And you can see this was just where prices parked right now, right? So this is not crazy. This is not a crazy view, like to expect price to drop. It's not out of this world. On the weekly time frame. Now, let's see what's going on the daily. On the daily time frame, you then get I guess base drop, which is classic supply and demand. You get this interesting potential break of this supply, but a reaction somewhere up there, and it fell for about Friday, Monday, and then today's Tuesday is trying to recover. I would not call that a demand. So, there's really nothing catching price. If price was decided to drop for real, it will drop for real. This is where our monthly, weekly arrow is. This is where our daily arrow is, right? So this is what you can expect, So, pound is looking slightly more risk off-ish, right? It could still go up, but right now it's risk off-ish. In terms of trading ideas, I don't think I'll take a trade there. I just want to watch. I really don't care. Look at this. I've already done my new affirmation cards for 2023 because I already smashed this year's thing. I'm very proud of this stuff, right? Gotta get your mind right? But remember, in all my videos this whole year, I kept writing my end of year target, right? So I've already started affirming next year. I just want to quickly find, it's one long affirmation. If you guys know, I used to have a long affirmation card, still do somewhere, but this is just easier to carry around. And so I think for the war rooms for next year, this public account on the war rooms, I want to literally through trade and make $1 million because we did 750. That was the target. Yeah, it's $1 million. I will have $1 million by 25th of December 2023. All right, so this is literally, I'm not making this up, right? It's literally there. I don't know if you guys can read it, but it's there. So I'm absolutely looking forward to the next trading year with you guys, right? So, let's get back to what we're doing. I got too excited. Now we're on NZDUSD. Okay, so back to pound USD. But guys, this is nothing. I can't emphasize this enough. Affirmations, meditation, visualization, trading rules, systematic approach to trading, and a clean, wealth creative mindset gives you everything you'll need in this world. So please get started on your own affirmation cards. I did this with you guys at the beginning of this year. I walked you through my affirmations. Maybe in a different video, I can read them out loud and put them on the whiteboard, but it's basically similar to the stuff that we've learned from Dr. Joseph Murphy in the 365 Money Heist podcast. All the stuff that I've been stringing together, not much has changed, right, in my affirmation setup. I am affirming myself right now for next year because I've already met the 2022 target, right? And this is based on trades done in the public war rooms, right? So the only difference between you and me most of the time would be perhaps capital, therefore lot sizing, but the process is uniquely the same. If the process is the same, then your small accounts can grow. They have to grow, all right? So just stay systematic, man. I'm quite excited. Right, so this is pound USD. I had to tie my hair and all that kind of cool stuff, get it out of the way. Right, so there's not much to do or say on this chart. A couple of hours have passed since I recorded part one, today, and I'm just looking at this chart from the New York session perspective. When I first recorded, still on the 29th of November, I was in the London session, but now you can see with the New York session, there's a little bit of a give or fight back. I want to get into intraday time frames right now, but we are going to look at the dollar just to see what's cutting. But for now, given the monthly, weekly, daily stuff that we just spoke about, it is really, I don't see, a massive push right now, right? I could be wrong. I'm happy to be wrong. And this is all going to be based on the dollar, right? The next chart that we're supposed to do together is NZDUSD. Remember, I have to fly through these things, ladies and gentlemen, just to get this to you guys at least by Wednesday, midweek. On Wednesday, I'm going to do Crypto Wednesday. That will be war room number 2 in the crypto markets. You want to check that out. I'm just moving down the coins, the top 100 coins, and just to get you guys thinking about trading these things. There's a lot of easy money there, and in preparation of launching Back to the Future with crypto trading, which will start in the first week of January next year. All right, so maybe after this whole Black Friday thing, the link will be up, but you can just subscribe next year if you want, or December, whenever you want to subscribe. And this will be a crypto signal service group, right? Just daily day trades, swing trades, whatever I'm selling or buying in the crypto market, not to invest. This is not the same as Wealthy in 3 Years program where we're making long-term calls. This is just day-to-day trading the crypto market, supply and demand. We don't care what's going on, long term. We're just taking great trade setups in there. So I'm running a crypto series run so you guys can actually see our strategy play out. And those of you who are going to register, there's somewhere on the 365 site, you're actually going to get videos of me back testing all these assets using the same rules I'll be teaching in the structured course, right? So that you're able to also understand when I get in and out of price and what it is that I'm seeing, right? So this is NZDUSD. For me, for the better part of this chart, I am still NZDUSD. At the beginning of the video, I told you guys I had pips loss, right? And this is the 100 pips loss here. You know, and remember, I did say I don't want to remove any markings from my charts. Like if I do war rooms, I kind of like just keep them in, and then I remove them with you guys, right? It's just not only just for transparency, but also I think it's beneficial for your own education. So you see this stuff, right? So I had a stop loss hit here, and you can see prices inching forward. Remember, all of this is based on the reversal of dollar weakness. The reversal of dollar weakness is based on a lot of things. But let's summarize it to saying CPI printed low inflation. People got excited. Money came out of dollar. Safe haven flows were shut down. Money went back into risk on assets. Dollar fell from, you know, all-time high is not 30-year all-time high, not ultimate all-time highs. And dollar has actually fallen to a governing demand. But we'll get there. We'll get there, right? So, you know, price smashes through this demand, and then now we can see that, you know, the game plan has changed, right? The current markings was this original sell I took a long time ago. All right, so this we can also remove in terms of this beautiful sell here, and we can now start to kind of like, for me, again, no interest in this chart, even though, you know, most people are still priced in more dollar weakness, and we'll check out the dollar in the next 2 or 3 charts. For me right now, you know, there's not much risk to reward if I was to swing by. If you're an intraday trader, definitely can slice and dice this chart up, you know, all the way up there. Excuse me. Sorry. There we go. I've been talking a lot. Actually recorded the first half of this in the morning, and then I did a 2-hour stock market open on the New York session, and now it's 5:30 p.m. and I'm continuing the war room. It's incredible. I mean, how much I love it. I love what I do, but it's a lot. It's really a lot of time that I expel for free. It's interesting, right? So this is, look, I'm going to remove all these bearish engulfing patterns, and then maybe let's not rush. I am, given, you know, the multiple things I've done, you know, during the recording of this, I do feel a little bit low energy, right? So my intention is to finish these assets, but, you know, some of them we can't rob the process. We have to do a full multiple time from analysis, right? So this is where, remember pound USD, remember euro USD, governing charts USD by a supply, pound USD by a supply, NZDUSD by a supply. Would it be surprised if I hear that the dollar is now at a demand? I don't know what you see. You tell me, right? Look at this, right? So this is where NZDUSD is a supply within a supply, right? You can see that price didn't distribute calmly. That's fine, right? We can draw a lot of things. We can draw Fibonacci to actually tell this is like a retracement zone, like we did in the previous chart, and maybe we should. Okay, so I'm gonna go for the ultimate swings right now, and not, you know, anything short. So I'm gonna look for a big supply when we got to I guess a bottom. Can't really call it a big demand, right? Price never actually made contact there, right? So I'm gonna draw my Fibonacci facing downwards because I'm bearish, right? And you can see here that this supply is inside this interesting terrain. This is what we call our PCP range, potential continuation pattern. There are potential continuation pattern order blocks. There are potential continuation pattern zones within supply and demand. What are they? How many are there? Link down below, right? Please just check out the 365 course, 60% off. It's worth your time to really go through all those lecture videos and have a step-by-step trace, a mental trace, right? Guy, if you're a 365 student, by the way, and you stay in East London, let me know. Let me know. I don't want to jump the gun, but I'm thinking of buying a building and opening a trading floor in East London next year. I like the town I'm in, but it's more, it's quiet. It's not like, you know, metro. Like East London is something that me and my partner are thinking about moving our family to. But we just got this house, so I don't know. We'll see. But I just want to know if there's even any like 365 tracks. If you're watching this video, comment and just say East London. I would really appreciate that. But whether there is anyone, you know, there or not, you know, it's just I'm just letting you guys know. It's in the works. Either we move the floor in Grahamstown to East London, or we open a second one there. We shall see. Right. This is in a PCP range, right, and a common retracement. So that's where this is. And for the previous charts that we did, I think the range was between 50% and 60%, right? PCP means potential continuation pattern. It's where the trend has the probability to continue the downward trend, which is why I'm saying this is possible, man. This is possible, right? It is Christmas. We can look at trends. We can look at, you know, end of year trends, how the dollar does. at the end of the year. We can look at all sorts of interesting things. We can look at, midterm election results and all that kind of stuff. We can spend time looking at different things, or whatever makes you happy, right? But generally speaking, if you listen carefully, structure talks loudly, right? Structure talks loudly, right? So I have no interest right now in the world in buying the stuff. Why is this even in my ear? Sorry, I have none. I have no interest in buying all these risky assets we've looked at, even if they might buy up for the next week or two, right? It may be short-term day trades, good for you, but swing trades I have none. Or like this is fundamentally against my rules. If I don't have the balls to sell, I just have to stay out of the market, all right? And that's my message to you. If you don't have the cojones to take these sells, then just stay out of the market and wait to see. Because we don't buy inside supplies until supplies are completely taken out and price finds demand. That's it. That's the goal of being a mechanical trader. Anything outside of that is you are a good luck, good charm gambler, right? And I don't know what the odds are there, But yeah, to me, this is interesting. Two supplies made contact. Let's go to the weekly time frame. Weekly time frame, you can see we are literally, if I can just borrow this daily zone, we're literally got smack inside the middle of a weekly supply. Very strong bearish engulfing pattern, very strong supply, clean imbalance, creating a V-shaped demand, rally upon rally, complicated 365, making the top part point of that governing supply, or part of that pattern. Remember, there are two supplies inside that governing zone. I hope you remember. All right, I just showed it to you, right? And I don't really see this as a strong point of view, although there'll be those people who like reading candlestick patterns and telling us about dodges and all sorts of things and what that might mean. It's insignificant right now, but you could consider it a high point. I really don't, because the imbalance is short. So that's to say, if you're a bull and price breaches this area, right, we can then almost make the conclusion that price is going to continue to go up. But if not, then the supply might actually have a lot to prove. And where will price go? Well, there's nowhere else price can go except back down here for a start, right? For a start. And if not continuing down there, but it could come back up like that. But this is the very first target, and that's really a good target for swing. So I'm really liking NZDUSD for some selling, right? And no buying for me. Right, inside the zone, however, on the daily time frame, I could wait for a push-up. Push-ups are not, they're not owed to me or to us as traders, right? Markets pretend right now, markets are negotiating with the supply, markets have broken the supply as per my original chart. I'm sure you saw it. And so when I say a push-up, I'm talking about something like this. And why am I drawing this zone a little bit bigger than how I taught it in module 1? It's you just start to get a feel. When markets are in a rush to fill orders, you get a feel. But what's the accurate mechanical way to do the reading? Switch to a Kinihashi, then you'll see for yourselves, right? Look at that, right? Look at that. If I've taught you before, look at this doji candle, right? So our area of competition is technically even bigger, right? It's that big. So this is why we know where price is going, right? We understand the direction, but markets don't trigger us. So if you have that small problem, just make a little tweak to your trading strategy, right? Look at your candlesticks, look at the supplies and demands I've taught you. There are about 7 of them, major 10-in points, 10-in points, 365, complicated, Talitha areas, the PCPs, valley shape based demands, all that kind of stuff, engulfing the 50% body candles. You've done the course, all these different types of supplies and demand. You look at them from a candlestick perspective, and then just confirm your bias by switching to whatever they're called now, Akini, Ashi, candlestick patterns, right? And you'll see the clarity, right? So you can see here, supply still shredded, right? So this is a good place to be. So on the daily time frame, for us to come here, it wants the whole engulfing candle, the actual red candle. That's how big that area of value is, right? So this would be a for me anyways, this is what I'm looking for. For me on NZDUSD, I'm very happy with what I'm seeing right now. Profit target is a little bit rare, so if I get in a day or 2 or 3, I'll simply just break even, right? So this is how my areas of value end up being 122 pips, right? And that's crazy, insane, and it's unnecessary, but it's just how I swing, right? So I don't have to compete with price on smaller time frames, right? Profit target, you really need to just, I guess, watch out for this. So if you're a big enough account, and by big I mean 400, 500 to $1,000 US, I'll split the entry, okay? with smaller. So first of all, 5% or 2%, and split that 2% into 3 entries, so that one of your first take profit targets is somewhere here, because you're going to get a lot of noise and confusion here with support and resistance traders. The setup is building, that structure for the near future, right? So TP1 would be here, and TP1 is simply to cover the cost of doing business, right? So you literally cover the cost of doing business. If you break even for the second 2 trades, and you should do this for all your trades, if you break even for trade 2 and 3, for entry 2 and 3, after TP1 has been hit, because you've broken even, you kind of still need to stay in the game. So I'll still set 1 pending order in there that's risk running. In the event price comes in, breaks you out of break even, and then moves a little bit higher and then drops. You don't want it to drop without you. You calculate the pips here. I've shown you guys my pip calculator, right? So you know how much the distance is between that entry point, right? And this is always that extra penny in order for me, right? Because everything else is now risk-free. Take profit 1 has covered the cost of how much I risk in that zone. Entry 2 and 3 are broken even. So trade number 4 is technically the only risk on or risk running trade, the one that's going to cost me money. But it's actually very good to have an entry point like that, so that if anything happens here, you still get triggered and you make your money coming down, right? I hope that made sense. I know I'm spitting a little bit fast, and that's because I'm very worried that I won't finish this content today. It's my goal to finish this today for you guys, right? Right, but I'm very happy with this. So I'm quickly going to make a manual note here to say trade, right? And that on my trading journal, I can then come back and mark up and do my calculations, etc., etc. But this is, for me, I'm happy to lose money on it, but that's what I see, man. AUDUSD is the next baby, right? So AUDUSD, I did say at the beginning of this video, stop loss hit also 100 pips, right? You can see everything is there. But this is what happened, right? Hoping for this supply, stupid me, right? This was a clear one, wait for a higher supply, but CPI, all that stuff screwed us over. All good. Mark Douglas had this interesting theory in his books back in the day. It's like you only trade when you have accepted the risks. That is, I absolutely am okay with this money never coming back, and that is a powerful psychological place to be. Enroll, hey. Hi, I've never seen such in my life. I don't want to get into it, but you guys really the link is in your email. You click, you enroll, and then I get an email. It tells me that 50% have now enrolled, and then I drop trading psychology. It's literally for free. Maybe I should start having a membership joining fee or something, But psychologically, I don't know if you guys know this, but there've been multiple studies that have been done all across 30 years or so. Harvard, social sciences, even here at Rhodes University, South Africa, like a lot of people don't value free things because capitalism has taught us that anything with value has a monetary attachment to it, right? So you get people like me who do signals for free, who never charge monthly. Like some academies, you have to you pay a monthly fee, right? And one of the reasons why I don't do that is because I know how busy I get. So, you wouldn't even get much out of me if I get too busy, right? Next year, maybe it's different structure, right? But human beings, it's like you almost, that's why scammers make so much money in Forex, because scammers give you guys glitz and glam and then attach a hefty fee, 20,000 rands, and people run to that because people assume value is in all the things that glitter, right? It's a weird thing. It's a sad thing in society, but I understand it. It's not your fault, right? It's not your fault. It's how I've been conditioned. So all I've done here is I've removed enroll. If you're a registered 365 student, please enroll to the free site, because I have to close it and make it not free for future people, right? So you're actually also messing me up a little bit, right? So this is interesting, right? So this is where we lost money. I lost money. And you can see there are low supplies, and maybe price going to come up here. This chart is already marked up. It's probably the exact same thing we saw with NZDUSD, the exact same thing we saw with pound and all. These assets they all behave the same most of the time, right? This is a nice clean demand. I told myself I'd buy if price ever came back here. It didn't, right? It just kept exploding upward and upward without me. So I never really jumped on the gravy train, right? So this is what I see. But just to not cut corners with risk assets, AUDUSD, look at that on the governing time frame. Clean tap here on some weekly, daily demands into that area there. Now that area looks weak, right? Area 1 looks weak, but it's a bearish engulfing pattern inside a bearish engulfing pattern, right? Just like NZDUSD. So for me, again, it's a sell, like it's a sell, and already on the daily, you know, the only place to sell for me is kind of like marked there. We can get a better area of value with a Kinihashi, but most of you wouldn't be able to handle it in terms of your accounts, because technically speaking, we should all be in it right now, right? So I'm not gonna open a sell trade. I'm just gonna wait for it to make its way up there and see if that works out. But yeah, there are two supply zones, one top of each other. So, you know, just risk smart, right? Calculate the pips of that zone. Look at your account. What can you afford? And then act accordingly, right? Because the pips matter, right? Because, you know, you can't put a stop loss in between two supplies. It's highly risky, right? You could get stopped out and price could still go your way. So your stop loss has to be outside that zone, right? So you have to really go, damn, this zone is almost 200 pips. So how much of that can I translate to my small account, right? So maybe I have to go 0.01 and just hold. And that's okay. Process beats profits. Process beats profits, all right? So if you're looking for rent money, this is not the chart that's going to give you December rent money right now. But if you're looking for process, this is the type of trades you need to keep taking. You need to keep trading. You need to keep applying the pressure on good setups like these and seeing what works and what doesn't, right? So those are the first, you know, AUD. I'm going to write trade here on AUDUSD, which means I'm going to want to take this trade and set up my pending orders after I'm done with, you know, this probably tomorrow. I'll set them up for some time tonight. Right now, you know, I've been very, you know, keen, right? You know, when I was teaching on the public Telegram group, I was teaching on the dollar a couple of weeks back, and I removed all the mark-ins, and I forgot to save a preset of the DXY, so I've lost all the demands I bought, all that historical data, all the beautiful trade. Because remember, I backtest myself, backtest the charts on the strategy, but I also backtest what I actually did. We should talk about that. There's backtesting the markets to see if Leroy is crazy. So you do the course, you learn the rules, and you backtest everything. When you backtest to get better, you must backtest every weekend. My humble opinion, you take 10 charts and you break them down, man. Time frame by time frame by time frame. Historically, you become a better trader. You wanna think better, you read more. You wanna write better, all right? You read and write more, right? You wanna trade better, you master a strategy and you backtest the living daylights out of it. That's all it is. Backtest upon backtest upon backtest. You can become your own guru. You can create your own strategies because you start to see that human beings are predictable. Therefore, markets are readable and you can be profitable, right? So I lost a lot of marking, you know, key marking zones that I done here. During the time I was doing a video for you guys, you know, mapping out, you know, the relationship between Republicans and Democrats. And you can see Democrats marked blue, Republicans marked red from the beginning of time. Republicans create more supplies. Democrats always take over from value-based demands, right? So we can almost tell, or you know, where Biden is most likely to leave the dollar. Biden is most likely predicted to leave the dollar slightly above an all-time high. And then if Trump runs, apparently he wants to run again, and if he does win, who knows? Who cares? You know, as a Republican, his job is to sell the dollar down. It's going to pump up the stock market, right? I literally was going through my phone and I found screenshots when Trump was president. And Trump was one of the weirdest presidents ever in the sense that he literally used to announce at every rally, the NASDAQ is 8,600. It's up 500 points, right? That was his thing, right? So, you know, all these guys have different, you know, locomotives, right? But long story short, here's your dollar, guys. Your dollar has finally arrived at a very interesting place and seems to be taking off already. Talked a lot yesterday, talked a lot today. I'm starting to develop a sore throat. I apologize. But you can see here, right? It's almost like it's reacting. I'm like, what are you reacting to, man? Because I need a better touch. Unless if the area of competition is the wick of the bullish engulfing green candle, then yeah, of course, that makes a lot of sense. But for now, I'm going to draw it like this, which is generally how I normally like to take the trade. And then I'm going to go at Kinihashi to get any confirmation. There's zero, there's nada. Look at this crazy stuff, right? And we can do other cool things that are in the course, which I haven't done in a long time. What's the thing called? 50% for the candle, right? Just to see if we can catch. And there's, remember, I've spoken to you guys many times about making sure you get the right one on your charts. There are different ones, right? And then I'm gonna see. I just want to see what you see. Sorry, I haven't done this in a while. You know, I very much prefer clean charts. I'm gonna go with the black dots. Or people used to ask me, what are those black dots? Right. The next 50% body candle, which will be a PCP, by the way, specific type of supply or demand, is all the way down there. All right, and I'm going to go normal candlesticks. I'm going to run the same thing again. All right, so you can see here that makes sense, right? Clean, that's the next demand, right? That's a low. So if the dollar crashes beyond this point, then yeah, we're going back to those 96 levels. And I really wish I had my old markings, but let's just super confirm as quickly as possible. Come on. Right, so we've got a couple of them here. This is the stuff I teach on module 2, guys. So there's one there, right? And I think there's one here as well. All right, let's just do that one more time. You see those black dots? Yeah. So, you know, it's quite a lot. It's quite a lot for us to wait till price gets down there, right? This could easily hold the dollar, in my humble opinion. But we shall see. But for now, let's conclude. All the risky assets are by supplies, and the dollar is surprising or about to get to a supply. We need to wait a little bit. We need to wait for them to actually get to those daily supplies. But overall, right, AUDUSD, NZD, pound, euro USD, they're all at supplies, and the dollar, look at that, arriving at a demand, right? So we can, I can see a quick inverse, right? The dollar on the weekly time frame is showing what we call a PCP to the downside, a continuation pattern, right? The bearish engulfing pattern, a retest, right? So we should expect more downside, right? We've got our first weekly demand here with a fresh touch that was used to continue the trend earlier on this year, sometime in August, right? And then we've got, you know, this old school stuff, man. Module 1. Module 1 is here for you, right? Clean counter trend, complicated 365 candles, ready to catch price, right? So that could also be a good place to kind of like look out at the bottom of this whole area. I don't like the imbalance that leaves that zone. Let's see what Hakini-Hashi has to say. Okay, Hakini-Hashi, the balance is better, right? So we'll see if this holds. If it doesn't hold, then we're looking for down here, right? But you know, I would be very careful, right? Like I said at the beginning of the video, there are a couple of things we should consider. It's the last day of the month, so this coming Friday, NFP. Literally, today is Wednesday. Did ADP drop today? Wouldn't it be interesting to see what ADP is? Or tomorrow is Wednesday, right? So Friday is the 2nd of December, right? As I'm recording this, you guys are gonna see this thing just before Friday. NFP is coming, right? So look at where price is, right? Really getting strategically ready to go up NFP. So markets could use that, right? All we need is a positive reading, and the dollar is strong. You know, we shall see. This is interesting stuff, right? So do you mind if I just quickly have a look? I'm so focused in the world of crypto right now, guys. I really a bit out of touch. And the admin process, man, filings, paying off corporates, end of year bonuses for the trade. It's been fun, but I'm tired now. I am tired. I'm glad everyone else in the office leaves tomorrow. So I can get, you know, work done. Right, so this is Wednesday ADP, there we go. ADP is looking at about 197K jobs to be added. Remember that article we read about next year, how this is going to drop drastically to crazy levels. And NFP is this Friday, right? And NFP is looking at 200K jobs being added and unemployment staying steady at 3.7%, right? So watch out for this. Remember, NFP is not the only number you need to look out for. You need to see NFP when you get when markets move crazy and like, but you know, NFP hit. It's because maybe unemployment has gone up, right? So it's so what if you're creating more jobs? It makes no difference if you're creating more jobs, but you're also losing jobs at the same time, right? And remember that article we read this was the soft spot for the Fed, 3.7. So there'll be a lot of like nudging there. And you know, you want to avoid a wage price spiral, which I think right now is not really of a big interest, right? So yeah, the dollar is sitting at an interesting time, and I think very soon, a couple of days, you know, we'll see what NFP says tomorrow, Wednesday. Hopefully this video will be out by then, and then we shall see what happens on NFP. But this could be a good place for the dollar to start to regroup, if you know what I mean, right? But if it doesn't, then we know we're looking at about going back all the way down to 96 levels. And at the end of this war room, we should definitely also talk about gold, because then we can actually see the inverse happening, right? Right, so DXY down, USDJPY. Just to remind you guys, I locked it about 145 pips on this one, but I'm pretty sure we've lost it more. See, there we go. I'm going to lose most of it by the time this is all done. I'm going to lose most of that stuff as price slowly but surely comes back to me down somewhere here on break even, right? So this was a clean trade up, didn't take any profits, and prices come back down. I'm going to let it hold, man. There's nothing I can do. I mean, I entered somewhere down there. I'll hold it break even. If I get stopped out, it's fine. I'm actually tempted to put a pending order. It's not signal advice or financial advice. Remember, class effect is the only problem. But I personally will put a pending order. It's a weak zone. And the reason being, you never know where price wants to be. So if NFP is positive, this could be a good place for price to break. But if NFP is a setup for weakening the dollar a little bit more, then the zone will be taken out. So that's why I'm saying don't buy, because I'm putting a pin in order. It makes no sense right now. The structure looks like it wants to sell. Yes, DXY is preparing for a rise, but we're not there yet. And we've got a very highly volatile week, right? So if dollar is on the losing end of data this week, that's going to break through, right? So if it breaks through, I'll be breaking even. I'm actually going to leave it. Let me do the right thing and help those of you, follow rules. Just follow rules, right? So I will not be adding a second buy order here. I'll leave this pending order to stay at break even, and the reason for that is fundamentally because it's just class effect, right? 2 touches. So for me, that's a no-go area, right? If something happens with ADP tomorrow, right, this is also a potential play for price to come here, play us, and then all of a sudden NFP drops us, right? Drops us from there. It's not a very good supply. It's actually not the type of supply you would want to take home to meet mom and dad, but it could rock our worlds, right? Got a PCP, we've got a lot of things going on here, and all you need to do is to kind of like look at structure and realize like the number of unfilled sell orders on this chart, and USDJPY was just unkind to me in this year, right? There's so many places where price either left me, never came back to trigger me. There's just drama. Like I can honestly say this is one of the charts where I made the least money in 2022. So yeah, desperate to get into a buy, but I guess too late, in the game. This was nice, but this was very short-lived, and then we shall see. There's always this demand here that we've been waiting for all year. This demand has been sitting all year. And we wrote, there was a weekly confluence, price just never came back, right? So imagine such a great fall. Imagine that, right? At some point, I'm sure by then we'll have reconnected with the trend and started to sell towards that level if it does happen, right? But generally speaking, once a trend line is breached, you don't really expect a lot of strength until price continues its fall, which is to say USDJPY at least should make its way down there in the very least, right? So once again, no more add-in buys. I am not advising anyone because I'm not your advisor, but I'm not telling you that I will be buying there because I'm not. Okay. Right, so that's USDJPY. We didn't even do a big MTA on it, but I'm sure you guys can appreciate the clean cut, straight to the point analysis on the daily time frame there. Right, there's USDCAD flying away. Right, so and like I said earlier on, when I did maths, I was on 20 pips. So prices moved a little bit in my direction, but also prices rushing for what looks like a supply. So it might be time. Oh, that's not too bad. Okay, cool. That's good money, right? So I genuinely thought this was going to stop me out, right? This supply was going to turn price around. That's why I broke even here. And when I last checked, I was only up 20 pips. So to see this incredible growth, that's some good money. So it changes the statistics I gave you guys at the beginning of this war room, because I really thought, yeah, I wasn't making a lot of money on this chart. Right, so I'm definitely going to make an adjustment right now after this and probably aim to take profit somewhere here. And then this is where we can start to worry. Right, this is where we can start to worry. And instead of leaving my stuff on break even, I'm going to move a little bit up now to lock profits. Using the 1 hour time frame, I don't know if you know about this. I taught on it before. You find the latest, freshest order block, which is that one right there. You see that there? That's the order block. So I expect price to retrace back there. And then I find if there's a beautiful cluster like this of 2 demand order blocks, then I also want to acknowledge the second one, move my stop loss from risk, right? Remember, it was at break even. Move it out of break even and lock profits under. You don't want to lock profits under the most immediate order block in the event it breaks. So I don't want to put my stop loss here. If I put my stop loss here and they take out that first demand to trigger the second demand, I'm just going to get kicked out of price. So I'm hoping that the two demands together make a nice trampoline for price, right? This is very parabolic. So those of you who are short-term traders, you can look for this. This might help. This might happen, right? This might happen. If not, if price comes all the way to a supply, then, you know, be very careful. Rather just sell. But yeah, I would like to take profit somewhere up there. You know, 300 and something pips is good money. Good money on a good lot size is good money. Right, so USDCAD, just to recap on the swing side of things, you know, onward and upward, I'm pleasantly surprised that this is actually still running my way. This is very, very exciting to see. And I'll take profit there. And then depending on the data, you sell if you see ADP forming up in a negative way and structure confirming that NFP is going to be negative. You can actually put a sell order there. But if you're wrong, you will be blown out, right? That stop loss will get hit. And that's not a 365 problem, right? So that's USDCAD. The next chart that I said we're going to look at is your famous, infamous NASDAQ 100. NASDAQ 100, right? Isn't this funny? Isn't this nice? If you look at my older war rooms, this is 86. So I'm talking, go back to war room number 84, war room number 80. I write everything down, so it's in front of me. War room number 81, war room number 80, all this stuff. We spoke a lot about, you know, this setting up. Sorry, I got distracted there, right? I say to you guys that, look, man, this was even before power was going to come, that there was nothing going on here. It's just people want to act like someone on TikTok was debating with me the other day that all trading strategies are the same. Like, yo, God, that platform is going to drive me mad. But I am on TikTok, by the way, so, you know, follow 365 on TikTok. I do a lot of short-based content there on TikTok. Very helpful. A lot of the back to the basics teachings. I've actually done, when I was offline and my girl's birthday and we went away and the hotel had terrible internet, what I found was I found a lot of good videos of mine that never saw the light of day. And I've just been chopping them and framing them up for TikTok. So I've got a lot of content, you know, waiting to be used there, right? So that might help, right? So check this out. This is the area where I said, look, man, I don't trust the supply. And then power came, and then just before power came, price actually dropped from that area. I wasn't in that sell because I already said I don't trust it. I said we're going to wait for this to happen. Then market zigzagged, acted like they were going down, and then CPI, and then your Fed pivot point, and then markets went risk on and then ran into the supply, right? And then this was the short-term trade I was in, broke even, you know, and I got stopped out on zero. And, you know, I had, like I say, normally leave another pin in order for that. So that's what I'm holding right now. We shall see. If markets clear this area here, which is, you know, about 11,500, then hopefully we can run up to about 11,100 at least. And I think that's going to have a lot to do with NFP and NFP and unemployment this week. So I'm really hoping the sell takes off down there. Happy to take some money off the table. I'm there. All right. This is literally a very good trade. Right, but this is our old supplies, right? So let's be honest, right? All this news about inflation dropping, CPI, you know, all that stuff, nothing has changed. Me disappearing, me getting very busy for about 2 to 3 weeks, 2 weeks, not doing war rooms. Nothing has changed. The old analysis is still standing. Nothing has changed, right? What has changed is human beings being random in the market, right? But smart money, the one that's very predictable and easy to read, nothing has changed. I mean, you can correct me if I'm wrong here, but NASDAQ is still holding onto that cluster that we spoke about, hasn't broken it, has made 2 formidable touches. That's fine, right? So the only thing to look out for is something like this now. So we could get this or we could get that. You know, that's kind of like the world we live in right now. But until a supply is taken out, for me, because my confirmation bias has not changed, you know, I like my sells right now. My sells are doing me very good, right? So this is not included in how much we made or lost in War Room 86, because this supply zone was given to you guys longer, way longer than that, right? I looked at the most recent cluster, but this is good money. you know, down about 400. And a lot of this is to do with the Chinese COVID protests, you know. Point is, I told you to sell at that supply, all right, and that supply is doing well. So all we need to do is to close below this area today. I think that would be a good sign. Yes, there's a possibility of reverse gains as markets come back to test a new supply somewhere there. I hope you guys can see that, right? But you know, outside of that, you know, protect yourself, pay yourself, you know, take profits if you need to. There's really nothing to talk about. We can look at NASDAQ on a higher time frame, but like I say, from the last time we spoke about this thing, very few things about how I view indices and price has changed. We've got a broken demand, check. We've got a lower demand, check. We've got, you know, Fed tightening for now, check. Like a lot for me, again, you know, it has literally come out of the words of Powell. Then I'm like, okay, these guys lie all the time, but at least if he says it out loud, they're gonna do their best to honor their word in a weird governmental way, which is still, you know, rigged with lies, you know. But I need Powell to actually say, yeah, all right, we are done raising rates. We have inflation completely under control. We lied about causing recession, and we're making a plan, right? Until then, I still see pain. I see a lot of pain. I see a lot of pain because every time traders and investors hear a hint of possible good news, they rally market. When you rally market, you double future pain. And so, you know, if you think about it, what I was trying to say to you guys in the intro of my video, and I don't want to lose my train of thought so much, but I'll simply say, yeah, does this not look like a chart to you? 3 or 4 months ago, I can no longer remember when, inflation hit this level, 9.1%. And then everyone was like, yeah, okay, it's peaked, right? It has peaked, it's done. No ways is this going up. So basically, it did this, inflation, boom. And then we wanted something, other CPI numbers, I can't remember them, but I'm going to make some stuff up. Maybe we wanted 8.5, we got 8.8, right? So it was a miss, right? But people were like, yeah, but this is good because it's peaked at 9.1. It's not going back up, right? You with me? I know you're with me. You guys are smart. Let me know if you're with me by liking this video. If you haven't liked the video, please do. I appreciate that. I would appreciate that so much, right? And then the next month, we got another reading about CPI. And people are like, oh, what's going to happen now? And wanted 8, I don't know, 2 or 8.1, and we got 8.2. I can't remember the exact numbers, but you get my point. The point was this has been happening. And then we got this 7, something, 7.7 or something like that, right? And people are like, yeah, man, this is literally a downward infograph of inflation has peaked. But the markets don't move like this. I'm not saying inflation moves. Inflation is the markets, but nothing in life moves like this. Nothing in life is steady like this line I've drawn up there. Not even successes like this. Not even winning the lotto is like this. People win the lotto by 3 years or 4 years look like this. They're broke and committing suicide and all that kind of stuff. Do you have a plan? A financial plan that maps your trading and your investing in your crypto and whatever, if inflation does this in the next reading? Do you have a plan for that? Do you have a plan for that? Because if it does that and it does this, right, it's going to be mayhem, right? And because human beings are predictable, we know they're going to dump. When they dump, we're going to be selling. So just all I'm saying is just this is what I meant by, you know, just because inflation is 7.7, right, it's very rare that inflation creates one trend down, right? Sometimes it trends down because of the fear in the economy and the trend and the Fed and everybody. People start, oh, hold on, let's wait and see. People are talking about recession. People start making lifestyle changes, you know, all these weird things. And then all of a sudden we get a low inflation reading that confirms one specific type of bias. And then when people get that one reading that they created with that one specific bias, guess what they start doing? Well, we saw for ourselves what people start doing. But people start pumping the markets up. If you look at US 30, it's high. US 30 is like, you know, trying to defy the laws of gravity, right? And rightfully so. I mean, it was a brilliant, student. I think his name is Martin or something. Like, he sent me an inbox or DM a while back on Instagram before I even covered it. He saw it himself. He's like, look, man, when I look at US 30 from higher time frames and all that kind of stuff, the US 30 is very bullish to me, right? And remember, US 30 is one of the assets that was lagging the most. It wouldn't breach 20% bearish even when NASDAQ and S&P 500 already had, right? And that's got to do with the type of stocks inside the US 30, your McDonald's, your, I'll do a post around that kind of stuff, right? But just be very careful, right? Because when people got that 7.7 news, they rallied the stuff up. So they could be creating a self-fulfilled prophecy. All right, that's why after every Fed pivot point, markets crash even harder. Think about it. After every Fed pivot point, markets crash even harder, right? So I'm very short, and you must watch The Big Short, the movie, and once again to really think about these risk-on assets and what it means, how people view them. Watch how banks deny things, refuse to act on time, and then watch what patience does. It's a real life story, and I think it's playing out again. Right. So those of you who, I'm not trying to edge you on, I'm just simply saying, if you're to ask me real talk, yeah, real talk, I don't think pain is over in this market. Right. Anyways, I digress. Right. S&P 500, next one. All right. So S&P 500 reached the supply. Okay. So that's interesting. So it's the very same place where the NASDAQ is here. Right. S&P 500 was the first to go down before the NASDAQ arrived. Right, so the S&P 500 has already done this dance, right? So let's be very careful about the dance. S&P 500 has done this dance. Arrived to the supply and gone down at this demand. I told you it was going to be 3,700, and it arrived there. And then after that, risk on continued, and now prices here. Very fresh supply. You know, I definitely want to sell there. Whether I win or lose, I definitely need price to touch me there, right? I remember even last night, I kind of like moved my entry point just a little bit lower, just please trigger me type of situation. I want to sell there. But I'm simply saying, when you look at these charts, NASDAQ 100 is still here, right, on this double class. Just look at this. You see, S&P 500 has arrived at this supply. NASDAQ is still here. So NASDAQ still needs to come there, like I said, like the S&P, and then maybe that. Do you guys see what I'm saying? Do you see? I miss lecturing at Rhodes. When I lecture at Rhodes, it's like live audience. Students are actually in front of me. They're literally in front of me. So I can actually see it when I'm connecting. So I'll say this again right now before I forget. It is December. We have boat cruise in January and end of December, right? But for the most part, during the holidays, I am absolutely free, right? So I can come to you except for specific dates. I'll let you know which dates I'll be doing family stuff. But if there is 10 people in South Africa, I think it's 10 people, I can't remember, but 10 people, and you register. So you could be one person who gathers 10 people to register. I will come and sit down with you for a while so we can start your trading journey and really help you see it live in present. If you're outside South Africa, in Africa, 20 people. If you can get 20 people to register, I will fly out and come there and spend quality time with you guys. I actually miss live audiences, right? Like I have to wait until third term next year to lecture at Rose. But it's interesting when things are done in person and we sit down in a conference venue from 8:30 a.m. to 5 p.m. with food included, blah, blah, blah. And we actually just keep hammering this stuff. By the time I leave, you still get the online resources and the online course. But by the time I leave, I promise you, it ignites something, right? Live classes and doing stuff in person is powerful, right? So what do you have to do if you want to get in touch with this thing? It's very simple. If you're outside Africa, you can gather 20 people to register. You just email me, especially now that my team is going on holiday, head trader at 365 tradingacademy.co.za. Just email me, let me know, what you're thinking and how we can assist, blah, blah, blah. 10 people within South Africa, I'll fly out for you, or, and 20 people out of Africa, I will come. But this is fundamentally, going to be a trip. If you look at S&P 500, you can pause the video if you need to write down the email address, right? The head trader is small letters. It doesn't have to be capital, but I don't think it matters, right? Head trader 365, right? And hit me up there, right? So NASDAQ is dealing with this. S&P 500 is targeting that, right? So there's not much to say. This is where the current drop is right now. I'll be very sad if markets have left me and have not triggered my pending order, which I know they haven't yet, because I looked at the markets with the senior traders when we're doing the stock analysis. So we're just waiting for this. So, you know, we'll see how low this goes, but this would be sad if it does, if I don't get triggered. But such is life, right? S&P 500 pointing downwards. Remember, a lot can happen this week. ADP, NFP, US 30, and I will do a special US 30, you know, breakdown. Maybe I'll post it in the private Telegram group for students only, just so you guys, you really see the different stocks and all that kind of crazy stuff, right? I need to remove all these markings now that I'm with you. You can see markets just borrow through, bulldoze through, you know, these areas of value. And I think we last spoke about them. I'm pretty sure still more of a seller. Definitely not yet had any buy positions on the US 30. Right, but there, right, markets are just moving along like there's nothing wrong, like literally bulldozing. But now look at this. So I'm going to go through these indices again. Now I want you to look at the cluster. So you see where this cluster is. This is the NASDAQ 100. This cluster here of of multiple engulfing patterns, right? So the supply within a supply. You see the supply within a supply. It's here. And then you see on NASDAQ, there's that fresh supply over all the way up there. It's there. And then you see on S&P 500, you get something similar, but slightly more ahead. Primary, secondary markets. I've taught on this many times. See that cluster, where you've got supplies clustered together? It's here. But you see where price is. So S&P 500 is ahead of NASDAQ in many ways, because it's dealt with this supply and moved up to that fresh supply. Now look at US 30. Look at US 30. You see US 30 where it is today? Let's go to the left. You see, you don't get, the cluster was here a long time ago with the Fed pivot point, but the main cluster that we're looking at is this old one. Look at this old very cluster. Price is done there and really dealt with that, right? Literally dealt with all of that. And you see that fresh singular supply is all the way up there, right? So just be very careful about these things, because these markets will always leave clues. If you can't read one carefully, look at them in groups of 3s or 4s, right? And for indices, you know, if I can just skip to the very next one, which will help us, I like using the Japanese 225 or the Nikkei 225 because it gets things done quicker, right? See, we're very much back to my original money maker. You see why all these indices are falling. So let's do this again. Now let's look at where price is today. You see NASDAQ 100, it's falling where price is today, right? We are in touch with this supply. Makes sense. S&P 500 falling where it is today, but we have not made contact with a supply. Interesting. US 30 falling where it is today, but US 30 is just broken a supply, and one would assume that maybe it was leftover sell. It's falling, but there's really no supply controlling it. And J225, the Asian markets move first inside a supply perfectly, right? Falling clean for the last 3 days from our origin. Remember this beautiful sell that we closed? Nice clean sell. We're going to remove all this stuff. This was such good money. This was such good money. So I love reading this index here to get a better read of US markets. And trust me, it works like a charm. So wherever the bottom is for this sell, all right, and I'll be honest, by the way, I sold here, I sold there, I closed all these trades. I'm not in this J225 sell right now, and I'm referring to price coming back here. I'm not triggered in that. Remember, I closed all my sells when that CPI report came out 2 weeks ago, whenever it was, when I found out, oh my God, inflation is pretty low, people are going to be risk on, right? But look, price rallied straight into a supply, killed it, right? And remember, Asian markets, and we're dealing with COVID protests right now. So this is beautiful, and it's a good thing to keep you know very much in tune with your trading, right? The next chart is gold, and that's our second to last chart, ladies and gentlemen. If you're still watching, it means you like me enough to like the video, or you hate me so much, you might as well just like the video for hating me so much. Right, there's my gold. This is what I say to you guys. By gold, I broke even, but price still going my way. I'm very happy. We shall see how far this goes, right? Gold started to take off and just broke through our original supply. Some of my trades were to be forced to be closed. This was just the latest, all this pending order waiting. If we look at those indices, right, where we remember where in all the indices, all of them are trying to target a fresh supply. Gold has arrived at their first fresh supply. Remember, gold is an inverse relationship with the dollar. The dollar is prepping to go up, and the demand, gold is at a daily supply. You know, a lot of interesting things could happen. It means my break from currencies was well worth it, not planned, but well worth it, because maybe markets by next week will be more aligned to my bias, right? Depending on NFP, right? And then, you know, let's check up on global economy with crude oil. If you're watching, if I do get the chance to chop this up into many small videos on TikTok, then which I highly doubt I'll get the chance to do it. But if I do, remember the long format videos are here on YouTube, which is just easy. You can just sit through everything, and you know, be part of the long-term family, right? So this is crude oil. Crude oil has been dropping, which I find, you know, interesting but not shocking. We spoke a lot about this. We spoke a lot about where crude oil should go. We started to sell. I did close this. But you can see markets have finally come back to take care of this demand. Why are we selling oil, right? Remember we said, you know, oil finally reached an all-time high, a major turning point. Supply and demand number one. Supply and demand number one is the first one that you learn in the course, right? There are different types of supply and demands. So when we spoke about this together many times, right, on the channel, and you can see now, look at this bearish engulfing pattern, the governing time frame. That's crazy, right? Potential weak demand there, my note's still there, right? So mark this demand held price up for about a month, and now we're looking for a drop in oil, right? So I would, you know, wager a slightly better drop in oil to come with it as global pressures ease a little bit. God knows what's going on with the war. It doesn't really matter. And then remember, there's the war. There's something called a petrodollar war, right? Remember, the dollar is losing, you know, footing, right? Don't ever think Powell and the United States are gonna, you know, just sleep on the dollar. A weak dollar, weak petrodollar is dangerous for emerging and other rising political powers. You're talking about China, Russia, Saudi Arabia, all those people. So watch that. So right now, all we have is just supply and demand doing its thing, right? Doing its thing. Now, let's see if we can find an entry point, which is what we do in these war rooms, right? So you would have to wait for a clean retracement in oil, number one. You can't just jump in and start to sell. You'll be lying to yourself. So let's see if we can get a clean read on the daily structure. Maybe let's start off with the mayoral structure, right? The mayoral structure has us looking at something like this. It's not clean, it's not correct, but we'll narrow down that area of value, right? So if I was to wait for a sell, this is what it would need to look like. Wait, let's go mayoral, let's go normal candlesticks again, all right? We're looking for an imbalance. We don't have one yet. According to my trading rules for my own trading, this is still 1, 2. Yeah, it's still maybe Friday. Let's see how, if this is a red candle on Friday, this closes red on Friday, then yeah, we do have something cooking, right? So right now we don't know. Right on the daily time frame, peak supply, breaking market structure somewhere here, peak supply there, bullish engulfing taken out, markets regroup. Then we've got bearish engulfing pattern, PCP, potential continuation pattern to the downside. You know, yeah, it's very tricky right now. Let's wait to see how markets close on Friday, right? There won't be any retracements anyways until then. Let's wait to see if markets can close lower on Friday and we get 3 red candles on the weekly time frame, then we've got an imbalance for a supply, and we can start to, you know, draw some of our own conclusions. I know intraday traders and short-term traders will look for areas to trade in here, and they might get lucky with that, right? I unfortunately don't believe in luck when it comes to trading. I believe in rules. Rules have kept me alive for this long, 9 years in. I would not change any of my rules for anything in the world right now, right? But, you know, prices respecting the downward structure. This is what H4 looks like in that zone. So let's see what happens. Maybe we get some retracements in oil. Right, folks, thank you for watching. Thank you for liking, comment down below. Maybe tomorrow, you know, fingers crossed, I do crypto Wednesday. I might have to go live. Could be at 4 a.m. I know no one will be there to watch it live, but if I go live, it means I don't have to waste time editing the videos. It hurts me when I go live and no one is watching because I didn't announce I was going to go live, or you couldn't come. It hurts the algorithm. So if I go live on any videos or any videos in general, please like, even if no one knows, no live audience, it will really help, keep that stuff showing up on your timeline, keep that stuff showing up on other people's timeline. We know that the general philosophy of 365, a candle that lights other candles never loses its flame. So we want to spread the word of clean market structure reading want to spread the word of do it yourself, learn to do it yourself so you never get scammed, so you never tell people that you lost money through Forex. The process is a lie. We also want to build traders and build a process and build a community. 365, shake my hand. Don't forget to email me if you're 10 in South Africa or 20 outside of South Africa. I will come to you. 365, man, shake my hand and thank you again. Peace.